What's going on, guys? Welcome back to the channel. In this video here, we're doing a stock analysis on Inmode Ltd. This is requested by Nick. If you want to see the company analyzed, write it down in the comment section down below and we'll get to it. Loading this up in stock research tool, what we're going to do here, folks, is look at 3 different categories to fully analyze this business. We're looking at the company metrics category, with financial valuations, and last but not least, the price analysis, where we will price out this company on a 10-year evaluation to figure out what the intrinsic value will be. So starting with the company metrics category of this business, this is a medical health devices business. They manufacture a lot of different medical products, so it's a little bit out of my realm. So just going based off the numbers here, I'm looking for things that stand out over the 5-year averages that this company has. So with our PE ratio, we are down over a 5-year average from 24-20, now down to 13.8. That's pretty good. EPS is up over a 5-year average from 0.92 up to 2.04, so that's great. A really high return on equity, and we're up on our profit margin. So first 4 boxes here, folks, if you take a look at this, some major improvements. We do not pay a dividend. Our average free cash flow is 73 million. However, we're currently sitting in the negatives for a trailing 12 months. This could turn around though, folks. So we will see what happens there. Our huge, is this real? Return on invested capital is 42%, and 5-year return on invested capital is 33%. What is going on? This is astronomically high. Those are phenomenal numbers though. That's amazing. But they are a $2.34 billion business with $377 in revenue and $169 in net income. Interesting. Decent Piotrowski score. However, we want to see this number between 7 and 9, and a really high Altman Z-score. This is very interesting business. Very interesting. Let's move over to the financial valuations category, and what this section of my software does is it looks at the cash flow statements, the balance sheets, and the income statements to grade this company out of 10. And with Inmode, we are ranking this an 8 out of 10. It's a pretty strong business based off of this front. The only parts where we're losing points is our 5-year PE average sitting at 24.20, and our share dilution, where they are diluting us, folks, by 12% over the last 5 years. That's not something that's not great, but it makes sense. Take a look at this chart here. This is 2019 up to the current time here, and we can see that this price has been going up and up and up, hitting a high in the last 52 weeks of almost $100. Now it's fallen down to 28.15. So it comes to the question, why is the price decreasing so much? And 2, with our share dilution, it makes sense because look, if investors love the stock, why take on debt when you can just issue out more stock? People are going to buy it anyways, right? So with Inmode, my question is, because I don't know anything about this business, just based off the numbers, my main prerogative or my main investigation point is, what is causing this to go down? Is it just because it's just speculation and people just are very fearful of the business? Because everything else looks green across the board. Take a look at the current ratio, 9.13. It's incredible. We have so much assets on hand to cover our liabilities. We want to see this number over 1.5, and we have that, no problem. A really high return on equity, amazing EPS growth, super low debt to equity, folks, as well as our revenue growth is going up. Free cash flow growth is going up, net income is going up, and our return on invested capital is extremely high, sitting at 33%, where we want to see this number over 10%. To me, that just doesn't make sense. To me, this is a phenomenal business based off the metrics that are being shown, but this is just the first step. It's the tip of the iceberg. If you're looking to jump into it, it may make sense, but let's do a price analysis first. Before we jump into a price analysis, folks, I want to just jump into the income statement just to see what the full story is. So we can see it's consistently been going up over the last little while, and the company's only been public, I'm guessing, for the last 5 years, so 2017. So it's just made the cut. This is why we like looking at companies that have been around for 5 years or longer. So look at that, from 53 million to 100. It's almost been like doubling, so on and so forth. Going to the cash flow statement, take a look at that. We'll go to annual, see what's going on with our free cash flow. So even that's been improving. Very impressed with this business. Not a bad pick, Nick. Not a bad pick. But let's go into our price analysis section. I'm going to fill out these boxes. We're going to do a 10-year analysis, and we'll touch base with it in just a quick second, folks, so stand by. Just so you're aware of what I like to do, in case you are new to the channel, I like to stay as conservative as possible with my numbers. So with our revenue growth numbers, I'm doing 25, 27, and 30. This is a fairly new company, right? So it very well could be doing these high astronomical numbers, but I want to give myself a decent margin of safety because that's the name of the game. So in case if this checks out to be green, that is phenomenal. And what I really wanted to do is beat my numbers, but nonetheless, I'm doing 25, 27, and 30 for our revenue growth numbers. Profit margin and free cash flow margin, I'm going to state this somewhat, I'm giving myself somewhat of a discount on these numbers based off what they've done prior. So with profit margin, I've done 30, 31.5, and 32 just to reflect. And with free cash flow margin, a little bit more of a haircut, doing 35, 37, 39. I kept the price of free cash flow and the PE ratio similar to what we currently have. These are phenomenal numbers, by the way. 13.55 is underneath 20. That's phenomenal. And a low PE ratio is much appreciated. So gonna hit calculate and see what comes up. And folks, if you are enjoying the video so far, hit that like button, hit that subscribe button. It means a lot to me, it means a lot to the channel. This app here that I have in front of me will be available to you, my viewers and subscribers, so stay tuned for that. Our final calculation is absolute insanity. I was absolutely shook. I had to record this part 3 times. But our current price is $29. Our average calculation comes out to $1,200. Guys, per share. What is this business? The only concern I have for this is just that it's out of my circle of competence. So look, on our low side, $795 for this business. That is insane based off these numerics here. Not bad, Nick, not bad. Now here's the thing, folks. This is just the first step of finding this business, or finding an undervalued business potentially. The main thing is, do you understand how this business operates? Because for me, I don't. I'm only going based off the numbers and I'm plugging it away to try to get an intrinsic value out of this company. But I don't know what their market share is like. I don't know who's running the business. These are other things that you have to ask yourself. I'm not too familiar with medical devices or anything in the healthcare sector in general. That's just not my strong suit. But based off the numerics, by plugging this in, it's showing that it's a extremely undervalued company. Now, the one question I would ask myself is, what do they have in the pipeline? It's astronomically high, or undervalued rather. Very impressed. Very impressed. I just don't know anything. It's just out of my realm. I can't tell. That's the one thing. I can't tell if this is a great deal for tomorrow, but not for 5 years from now. Do you know what I mean? These are the things you have to look into. But anyways, folks, that's the video. If you want to see a company evaluated, write it down in the comment section below. As I said, this software will be available to you, my viewers and subscribers, so stay tuned for that. But yeah, Nick, another shout out to you, buddy, because you know what? This is actually a fairly fun business to look at. It's solid in its financials, it's solid in its numerics. But personally, as I said, I don't know healthcare companies, but if you do, you know what? And it's worth it. It's right here. It's right here. Anyways, folks, thank you so much for watching. I will catch you in the next one.